Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have Craig Campbell, the CEO of Avante Logix. Avante trades on the TSX Venture Exchange under the symbol XX. The company is trading at $1.54 with roughly 21 million shares outstanding, or about a $33 million market cap. I'd now like to hand it over to Paul Andriola.
Hey, thanks, Trav. Craig, great to see you again. We chatted a couple weeks ago. Happy to have you here. Avante Logix, a name I know quite well and certainly have a history with it from a number of years ago, well before you joined the team. But more importantly, recently, we've had a lot of really smart guys tell us that we've got to take another look at Avante. So thankfully, we were able to catch up with you and have you join us today. So once again, thanks for joining us.
Thanks, Paul. And thanks to the Small Cap Discoveries team. Honored to be here and really appreciate you opening up your team of smart, or your audience of smart people, and look forward to having a conversation.
Perfect. So I understand you've got a presentation for us, which we love to have. Why don't we just hand it over to you and give us what you got?
Awesome. Well, thank you, and thank you to all of you that are joining today. I had an opportunity to do a little bit of homework on the Small Cap Discoveries team and watched a couple of the videos, and one of your previous presenters said he had the best ticker symbol on the Venture Exchange, and I'd have to argue that XX is actually the best ticker on the Venture Exchange. So thank you very, very much for the opportunity to speak to you all today. I am, so as mentioned, my name is Craig Campbell. I am the CEO and largest individual shareholder of Avante Logix. And the first thing I really would like you all to know about me, first and foremost, before I get into Avante, is that I hope that you'll get to know me as a security entrepreneur first and foremost. So I started my career in the security industry just shortly after my 17th birthday as a security officer. Between 17 and 21, I worked in every role, progressively senior in the security industry, from guard to supervisor to manager to wire puller, camera installer, etc. Ultimately culminating in an opportunity to get into the sales side. And it was through that sort of journey that I got to know the industry even better. And that led me to eventually step out on my own. And really the story of Avante starts with chapter one of my career. And chapter one of my career was building, scaling, and eventually exiting what became the largest privately held security services firm in Canada, a company called Total Security Management. And I exited that business in November of 2013, 15 years of building it organically from zero to just short of $100 million in revenue, and sold the business to Garda in November 2013. So over the next couple of years, a combination of taking a little bit of time off, going back to school, and then figuring out how to deploy my capital, I came along Avante Logix. And so Avante, at one point, you know, and Paul, to your mentioning of knowing the story for a long time, I've known Avante as a professional colleague and as an entity that was very much more focused on the residential side of the security industry for many, many years. And it was one of my great privileges and honors to be able to have the opportunity to deploy my capital into the business. I bought what at that time was 3.2 million shares in the open market, advocated for some change, and ultimately led me to both a seat on the board and stepping into the CEO role full time. So with that, I'm happy to come back to that, but I'll tell you about Avante. So I've been the CEO since January of 2018. My sort of activism activity occurred in the fall of 2017. And sorry, I'll just make sure my page down. I beg your pardon. Of course, my for some reason my screen advance button isn't working here. I'm just gonna do a quick stop share and then try that again. Okay, there we go. Just for legal reasons, I will discuss some forward-looking statements today, and would just refer everybody back to the disclaimer and all of our documents filed on SETI. But who is Avante Logix? So Avante Logix is the parent company and the publicly traded parent to two platform investments that I'll get into more detail. But our vision at Avante is to be the leading provider of technology-enabled security services, where we take a focus on acquiring, managing, and then building industry-leading businesses which provide specialized, mission-critical solutions that address the security risk of our clients. Said differently, the security industry is a massive industry, as we would all know. But like saying capital markets or finance, there's many segmentations below that. And it's our view that while participating in the greater industry is that we specifically look for businesses that serve customers that believe their security is both important and necessary. And it's a really key differentiator as I talk more about our acquisition strategy and the platforms that we currently own. The industry and the business, I hope you will find, it's a very compelling, highly resilient industry. As you'll see, our numbers from COVID, other sort of macro events are very much a driver of the business versus a hurt for the business. We have an amazing platform with very good, strong fundamentals. We target 10% organic revenue growth annually. And we'll focus and continue to look for step-out acquisitions. As operators first, we expect and commit to growing our gross margin by 50 basis points annually. And with this industry, with us being focused on the more services side of the business, we're CapEx light, asset light businesses, so very high conversions of Ebitda to cash flow. Capital expenditure requirements, as I mentioned, are minimal and more focused on the maintenance side. As I'll demonstrate to you, the team is both experienced, tenured, and aligned. We've built, scaled, and exited these businesses in the past. We all have significant equity stakes and recently put some guidelines out there around minimum share ownership. And our variable comp is very much at risk and pay for performance. As somebody who is aligned and have much of my hard-earned capital in the mix here, you can expect to see us remain consistently on the discipline side of the acquisition as good capital allocators. And I'll speak a little bit more. I definitely want you to see this as a growth business and an acquisition. But unlike some of the other consolidators out there in other industries, we are not just acquiring like Ebitda, just indiscriminately. We are very much focused on acquisitions through the lens of our customers and those customers that believe security is both important and necessary. And so I can tell you more about that. And then certainly this fiscal year is showing the growth of both Ebitda and free cash as we begin to lever up the investments that we made beginning in 2018, which is really what I refer to as the sort of 2.0 strategy for XX. So to tell you a little bit more about those platforms, but maybe first, why the security industry? I always like to tell people, especially when I meet them at cocktail parties, often they'll say, what do you do and what company? And for most of society, security is very much an afterthought. And so while you might look at a streetscape similar to this and just see an everyday street, I look and I just see infinite potential. So security is so pervasive in our society and only getting more important through both great macro tailwinds as well as where technology is taking us. So at the headline, it's a $9 billion industry. It has certainly got lots of fragmentation. It's resilient and growing. But everywhere I look, whether that be the security officer in the lobby of the office tower, the cameras, the video analytics, the license plate recognition, the employees going to work that we do background checks on, the locks, the keys, the safes, the hardware, it's everywhere. And as I said, we focus on customers, both our residential sort of end users and our larger national accounts, our corporate end users. Very much security is important to them. So where some people may have that night watchman in their mind when they think of a security company and a very much commoditized, low value add, we are very much focused on services. And by picking those customers that need security, is whether they're risk, real or perceived, or it's a way they do business, asset protection, we don't end up in that virtuous low bid, switch companies for a nickel type analogy. So as mentioned, acquire, manage, build, which is really core to our strategy. Acquire, we are looking to continue to acquire industry-leading security businesses around the 6 verticals I'll talk to in a moment. Once we own those businesses as operators first, we know what to do with the business, how to extract the synergies, and how to grow those businesses. And most importantly, generate cash and be able to recycle that cash back into the next opportunity. Today we operate 2 businesses primarily. Avante Security Inc., which is the box on the left-hand side of the screen. Avante Security focuses on ultra-high net worth families in specific geographies, currently in Southern Ontario. For those of you on the call today in the Toronto area, we're very much focused on Forest Hill, Rosedale, the Bridle Path, Etobicoke, South Kingsway, and now by extension, one of our acquisitions was into Muskoka. So our typical customer in that segment, and that's the business that is, I guess, almost 25 years old now. It's the original business that was reversed into the public CPC in 2008, is that we have thousands of customers. When somebody says, oh, you're like ADT or Alarm Force, my response to that would be, except we charge 10 times more per month, and we lose our customers 1/10 as often. So it is a very, very sticky business. And if you think of it being analogous to an ADT or an Alarm Force, we charge full price, and these are security systems going into homes that in today's day would average $8 to $15 million. Typically, our customers are spending somewhere between $25,000 and $40,000 at full margin for their security hardware that we install. And then we sell them reoccurring revenue that is everything from monitoring the video and alarm feeds that are coming out of the home to doing this rapid response. We have such density in these neighborhoods that we have full-time, both marked and unmarked cars, patrolling and responding. So one of the sticky pieces of that business is that we can respond in 6 minutes or less to any alarm signal. From then our second platform is Logixx Security. Logixx started really back into the commercial side as I arrived and redefined the strategy in 2018. Again, there we are coast-to-coast offices in all of the major markets, and it is very much security, human capital, security systems, and then managed services from those security systems. So as I mentioned, the 6 verticals is that when I think of the security industry, we're ultimately focused on the sub-verticals of protective services. So think about all things human capital, uniforms, people, and sort of boots on the ground. I'll skip to the, I got to reorder these boxes. The electronic security systems is cameras, alarms, card access control that you'd find in elevators and things like that. And that's the supply and installation of security hardware. The monitoring and managed services is then taking those signals and selling additional services from video analytics, alarm monitoring, concierge services, etc. Security devices and hardware, think everything from mechanical locks and doorknobs to safes and crash gates. Cybersecurity, we're not yet in this vertical, but we're specifically focused there on the monitoring in what we refer to as managed detection and response. So it's a real bolt-on to our already robust 24-hour operating centers. And then investigations and intelligence, think everything from a background check of an employee to a fraud investigation or workplace violence situation. So these 6 verticals, and each one of them are large, multi-billion-dollar industries in their own right. What I would ask you to think about is, in the case of both Avante and Logixx, we are actively deriving revenue from many of these verticals. And as we think about growth and acquisition, we would look at businesses in any one of these sandboxes by themselves. So we really think of it as, is this a new platform, whether that be because it's a new geography or just a new vertical, or is this a tuck into one of our existing assets? So just high level numbers, you know, a trailing 12-month revenue of $16 million on Avante with just over 100 employees. On the Logixx side, we're a $70 million run rate with 1,250 employees. So as I mentioned, I arrived in 2018, and this slide really sort of talks about the journey we're on. Avante at that time was approximately $20 million business producing $2 million of Ebitda. And it had long sort of been growing, but had grown when it went and did the reverse. I think it was a $6 or $7 million business that grew to 20. And the previous management team had really focused on the opportunity for Avante Security. And ultimately, Avante Security has lots of growth both in the neighborhoods that we're in by increasing penetration, increasing wallet spend, but there's also a number of communities across Canada and across the US that would look very much like the neighborhoods we're in. Ultimately, the previous management team had focused on almost an own the home. So as opposed to looking to new geographies, they started to look at how could they layer on more services. So there was a series of about 4 acquisitions that led to just be a residentially focused business, as mentioned, $20 million and 2 in Ebitda. And my vision, well, I believe Avante Security is one of the greatest security businesses you could find, is that just by total addressable market, it is definitely limited. In Canada, we believe the total addressable market is 12 communities and about 60,000 customers. And then into the US, obviously a multitude of that. But again, it had a great balance sheet. There was a few $1 million in cash. And I just thought it was a great business and cash flow stream to grow and ultimately diversify away from. So by all means, we will grow Avante Security Inc. And we intend to own it forever. But it gave us an opportunity to invest first in the commercial side, and ultimately we will continue to invest in other areas. In doing that, you know, sort of on arrival, there were some 4 acquisitions that hadn't fully been integrated. From a people, process, and technology, there was lots of work to be done, lots of controls and things to be implemented. So I got busy working on that. Brought in, you know, much of the team. Some of the team had been with me in past investments, and really with this view that we could scale the business. And so what you see in the center part of the slide there is to say, new team, new strategy. We had to front run a number of those investments, again, in people, process, and technology, just to be able to have the scale to start to acquire, integrate, and then build organically from. And so at the beginning of this fiscal year, Q1, you can see the turn back to positive Ebitda. And you can really see what happened there vis-a-vis the scale. And while we, in the last 3 years, have done 5 acquisitions, which I'll tell you a bit about in the next couple slides, that we've also been extremely successful in growing the business organically, to the point where our last quarter that we just released last Friday has the company now doing $25 million in quarterly revenue, with $1.6 million in Ebitda. So very proud of the team and group as we continue to execute on our vision. To speak to you about that sort of run rate, the acquisitions we've done, and then, you know, demonstrable proof that we're organically growing the business as operators first. Fiscal 28 concluded with $23.3 million of revenue. That's the time I joined. Our first acquisition was Watermark Security, located in Muskoka. This was a natural extension to our core customer at Avante Security. And we've been extremely successful in cross-selling and you know, really integrating that business with our core customer. Veridin, IntelliGuard, and then ASAP are the 3 acquisitions we've done to form what is now Logixx Security. So you see that day one, you know, had all these deals closed on the same day. These are the trailing 12-month revenues. So really, pro forma, ASAP was completed December the 1st, 2019. So you saw a tiny bit of it in Q3, but Q4 last year was our first full quarter with the ASAP acquisition. So really, we start with a $70 million run rate of revenue based off of our Q3 annualized. We're running at $100 million in revenue. So you can see the benefits of the organic growth that we've been successful in implementing and executing on. So that said, you can see the growth trajectory of each of the businesses. You can see that ASI, the Avante Security Platform, while a smaller part of the business, is still growing, you know, compounded off of its base. And we've been seeing great progress on the commercial side. So the 29.7% between Q1 and Q2 is very much, you know, some of the benefits of some new customer wins, as well as some of the COVID halo, because we are certainly having more helps than we are having hurts on the COVID side of the business. And as I say, this is no acquisitions have been completed in this time, and ultimately still at around that 7% per quarter growth rate. Back to the business segments, I've talked a little bit about the 3 businesses that turned into Logixx. We've done a lot of work, and Steve Rotz, my CFO, is on the line to really open up and improve our reporting, our segmented financials, so people can really see what's under the hood. And a big explanation for, where did we go EBITDA negative over that previous 4 quarters, you'll see much of that comes from those corporate investments that we've made in our finance group, in our corporate development group, et cetera, where the underlying base businesses have been performing well, and we've been improving the quality of the earnings in both sides. So as mentioned, Logixx very much focused on large national enterprise accounts, typically centralized decision making within a corporate security department that again has that security is important and necessary, and they really value us both for our quality and capability, and by having that sort of one-stop shop, one throat to choke business model. On the Avante security side, again, just to recap, ultra high net worth families, very much still around that bundled solution. One phone call, able to solve all their problems, and whether that be, the beeping alarm in the kitchen to the international travel advisory business that we provide our customers. I'm going to actually just skip through the Q3 highlights, and I'll come back to them, but sort of speak to the 2 other big things that I want you to understand about the business. For those that, just really look at the headlines and they watch the chart, one group of investors had asked me, well, what's going on with gross margin? And so the thing that you need to understand is that our gross margin in each of the businesses has been improving, and or in the case of Avante Security, stable, but it's our overall product mix and revenue diversification that's led to the decline in gross margin from 2018 being in the 35% range to last quarter being at 22%. So it is very much, we are continuing to operate the businesses profitably. It's just we went from the commercial side of the business representing 60% of the business, didn't even exist in 2018, to it now representing almost 80% of the business. The reoccurring monthly revenue is a super important metric that I hope our investors will hold us to account. At this stage, we're converting about 68% of our quarterly revenue is recurring and contractual in nature. So RMR, as pure RMR gets on the Avante Security business, last quarter we produced $2.19 million. And in the commercial business, 15 million of that is long-term contractual. We bill it every week, irrespective of demand. So, 70%. We expect this trend to stay in the high percent of quarterly revenue. What affects it as a percent of revenue will be the amount of new implementation sort of project revenue we have. But at the end of the day, the metric that we hope our investors hold us to account on is our ability to compound the absolute dollars in a consistent and predictable way quarter over quarter. Moving on again to the Ebitda and the return to profitability, what you see here is that 2-year trend of the direct operating expenses declining as a percent of revenue. So early on in fiscal 19, obviously building the team out, making lots of investments into building the foundation for growth, and we have been consistently bringing that percentage down quarter over quarter, and are now at a stage since we acquired ASAP that we actually have the appropriate amount of scale for the size of what I would refer to as the, sort of the parent, the pursuit cost. Our corporate dev, our finance team, we're busy working on a lot of opportunities, both externally for acquisition as well as internally for performance optimization. So we're now at a stage that we're appropriately sized, and we expect this to continue to decline as a percent of revenue as we now have a much more scalable infrastructure to take advantage of. So on the leadership, I'm very proud to have assembled and attracted a board of directors that I also think is somewhat, an aligned board of directors of high quality directors that you might not typically see in a small market cap such as ourselves. Sam Dubach, our chair, longtime and very reputable private equity guy who's recently taken a healthcare services business public. Carol Osler is the former global head of security at TD Bank. Joe Leader is just recently left as the CFO, but is our longest standing director and audit chair leader. Joe was the CFO at Parklawn Corporation and has been there as that business has grown to sort of $1 billion market cap. Stu Lyons, associated with currently with Bird Scooters, but previously with businesses like Mobilicity and SiriusXM. Andrea Federer is the Chief Marketing Officer at GoEasy Financial. And Jean-Pierre Taillon, while a advisor currently, which was just a little thing with not electing him on our slate of directors at the last AGM, will be an advisor until the next AGM. But Jean is the former CEO, comes from a long history at Bell, the former CEO of G4S Canada, and worked for G4S in their head office in the UK, looking after global initiatives, and then myself. Steve Rotz, my CFO, comes from a great background, very focused corporate development history, key member of the management team around businesses like Davis and Henderson, as well as Element Financial. Scott on the people and legal affairs is a former executive of the TMX and Parmalat. Han Korn and I met years ago when he emigrated to Canada from running G4S SecureCorp in Europe and came to Canada. Jeff Reed, who leads the Avante security business, is a longtime industry veteran that went out on the entrepreneurial path, built and exited a business and has returned to the security industry. And then Mark Henley on our corp dev team rounds out the team. So again, around that alignment, as mentioned, first and foremost, as the largest individual shareholder, I am uniquely aligned with all of you as shareholders and potential shareholders. The board and named executive officers now own 16.2% of the shares. We've increased 4% last quarter, and I believe it's 12% since the year began. And as well, the original founder of Avante is still involved. A part of Paul's introduction, he was around, a professional management team came in to join. He ultimately left an operating role to the board and then left the board. He's back with us in a customer-facing role, and he also owns about 3 million shares. And through his time, 2 years away from the company, never sold a share, which I just think is a very compelling statement to say there's a lot of people around the table here that believe in the business, and we've got our money where our mouth is. On the share ownership guidelines, I am very much a believer that there's no free riders. So the board must own at least their annual retainer within 3 years. I believe 4 of 6 independent directors are now at that level. CEO, CFO, and all the named executives must own at least a multiple of their base salary. So again, trying to do our best to create as much alignment as possible. And back to that earlier comment about not being just a guy out there trying to aggregate a bunch of EBITDA that looks alike. Having watched both some of my peers in this industry and others, where an acquisition idea or thesis gets screwed up is when you have a bunch of guys riding on options that don't have skin in and start overpaying for second tier assets using 6 times leverage. So what I can tell you is as we add accretively to this business, we'll be doing so in a disciplined way and with our money, first up. So maybe what I'll do is just switch back to our most recent quarterly results, just to speak quickly about what we're doing both on the income statement and the balance sheet. So as mentioned last quarter, and one of the tough things for us with the acquisitions is creating these comparable periods. So for us, you can see our IFRS reporting with both the previous year as well as the most sequential quarter. So as you can see from September to December, we increased from $23.6 million to $25 million in revenue. Direct operating expenses reduced, and that created EBITDA from continuing operations of $1.6 million. Important to see is that cash flow from operations generated 1.2, in the previous quarter, 2 million, and much of that change is a result of just the working, the COVID, specials that we were working on. At the 30th of September 2020, we did divest of a business called Citywide Lock, which was one of the acquisitions done before we arrived. We owned a 70% position in it and had the opportunity to exit the business back to the 30%, the family that originally owned it. And so these results have been adjusted for that fact. So on the income statement, we do believe we're poised for continued growth. The cash flow generation is improving our balance sheet, and we've reduced our senior debt, and typically converting at 85% of free cash flow. We're continued to poised to generate cash. On the net debt to EBITDA adjustment there, so our net senior funded debt sits at just over $8 million, with our sort of forward-looking 4 quarters. If you take this EBITDA and multiply it by 4 at $6 million, so we definitely feel that we're appropriately levered at this stage and potentially under-levered. And actually on the next street, I'll talk about our Fairfax convertible debenture. So in December of 2019, we entered into a convertible debenture with Fairfax, and Fairfax have been wonderful partners. The $8.26 million at 156 converts on an as-if converted basis to 19.9% of the fully diluted. And they have been great partners, and we're appreciative of their support of the business. So you can see here that, accounts receivable, approximately $18 million. So again, our total debt against, our accounts receivable and our cash flow generation, we feel very good about. And with that, we do believe that at current levels, we have room to grow, and we have room to take advantage of some of the near-term acquisition opportunities. And if and when the markets, present the opportunity to do something that's accretive to shareholders, we will definitely take advantage of the market on that regard. So I know I jumped around, but maybe I'll take it back to that sort of highlights, key takeaways, and maybe turn it back to Paul to see if we have any questions.
Perfect, Craig. Fantastic job here. as always, you've made my job easier and harder at the same time, because you've answered most of the questions I've had here. I want to remind everybody, if there's any questions that any of the listeners have that you want to ask, just use the chat function as part of the Zoom panel there, and I'll do my best to ask Craig that question. Obviously, a good portion of your future growth is dependent on M&A. Why don't you give us a better idea of what you need to fill? Like, what are you looking for now that you either don't have? Maybe it's geographically you want to expand a certain market, or technically. Give us a better sense of what you're looking for.
Yeah, so Paul, great question, and thank you for that, because the part I probably may have jumped over is certainly the 2.0 strategy is that, I believe that there were this great business that would continue to generate cash, and we could buy accretively, other businesses that would continue to generate cash. So while we are acquisition focused, we are just as much organic growth focused. And so I had painted a vision that I believe that we can deploy, over the next couple of years, a sizable amount of capital to take advantage of the opportunities that the industry presents. That said, we are not going to do it in a way that's, irresponsible or dilutive to shareholders. So at the current stage that we're at, and being operators is, on one side, I want to say we don't have to do anything, and we can continue to grow and generate cash. That said, COVID has been interesting in the sense that some of our acquisition targets, have fallen off. And we really did think that there'd be a little bit more distressed opportunities and some people getting upside down, and we were hoping for that. And then the other side of that equation is, in some cases, some people just said it's not time. And in other cases, people, remain with value expectations that are tough to get by. And so with that customer lens, I guess what I would say to you is, I believe in the security industry, and there are many businesses that are just predictable, steady Eddie cash flow generators, and I want to own as many of those as possible. So today, as we have both inbound and outbound deal flow going on, first question is, why does this make sense? And does it make sense to our customers? And does it belong? Is it a tuck-in to ASI or LSI, or is it a new platform? And so with that, in ASI and LSI, we are looking for tuck-ins that can add both capability and geography. And so while we're across the country now on Logixx, there's still some areas we'd like to fill in. There's still some product offerings that we'd like to be capable of providing. And then on the residential side, there's still, a bunch of communities out there that we'd like to penetrate. And so we're looking for that. And at the same time, we're looking for that third platform that, is yet to be named.
So it sounds like you do have a pretty robust pipeline of potential acquisitions if you wanted to pull the pin on something. Is that correct?
Yeah, absolutely. Listening back to some of our calls in previous quarters, what we would have said as COVID arose is that we were going to take our foot off the gas a little bit, and we were going to be internally focused until we figured out what the world looked like. I'd say here we are a year later. I think we understand the world a lot better. We do have some opportunities in the pipeline where there is still very good, predictable earnings and results based off of that reoccurring sticky revenue that we're targeted. And in other cases, we've got some great opportunities that we're just going to let stew because they're not as predictable, because they're more implementation type service businesses. And we'll wait and we'll be patient. And when we strike, it will be accretive and it will be quality.
And your team, I've noticed your team has done a number of acquisitions from several different industries. I mean, that's always so important in this. Maybe give us a little bit more sense of some of the key people you're leaning on when you're reviewing these deals or even trying to find new deals.
Yeah, look, I think number one, what I actually on the find the deals, what I'd like to say is, not that there's not other great guys and girls on the team that come with relationships, is that, I have 25 years in this industry. TSM was on both sides of the border, so we were across Canada and in 8 US states. So there's a lot of proprietary relationships and a lot of proprietary deal flow that have been built up over many, many years. And the IntelliGuard acquisition was absolutely proprietary, no broker. Veridan was proprietary. ASAP, while there was an intermediary there, it was still relationships that handshake across the table, and we that meant something to that deal, and probably got us half a turn of Ebitda better than the other competitor in the hunt. So absolutely, we've got some great deal flow. We aim to be the entrepreneur's acquirer of choice. As you know, many of these entrepreneurs have built a lifetime, and it does matter who it goes to. Ultimately, that's not necessarily going to be a quarter or a turn of Ebitda, but it when all things are equal, will win. And I think what I'd say is, Steve Rotz, not to single him out, but he was a very important hire for me. I'm an entrepreneur. I see the world, in most cases through the upside. And so Steve very much was hired with a mandate to be my alter ego and to be that disciplined CFO who's battle, worn, both from working credit in CIBC as well as working corp dev in these other busy shops. So I think together we form a great team, and then put the rest of the team around the table, designate somebody to be the devil's advocate, and we've been doing pretty good.
Fantastic. I want to talk a little bit about what you said about your board and making sure they've got a vested interest. I'm a real fan of seeing boards built the way you've built it, and you're actually very unique. So I really wanted to highlight that one more time. So you're asking your board members to make sure that they're putting their money, alongside all of their shareholders. How do you do that? How do you find directors that are, quality directors and have that mindset? Because I got to tell you, it's pretty rare in the space.
Yeah, well, I think to my point that I feel like the board punches above its weight as far as market cap and micro cap sort of Canada goes. And at the end of the day, what I think that is up to, well, so in one way or another, there was some 1 degree of separation between each of those board members. So, there is a personal history, but they're people that I, have sought out their advice and mentorship in the past. So there's some sort of relationship, but they're all people of quality and integrity, and I would argue profile, that they're not gonna they're not going to join this board to be yes people, to let me run, and the team run wild on them. So I think they believe in the opportunity. They believe in the team, and with that, they also understand and are distinguished people in their own right. So their fiduciary responsibility is very serious to them, and with that, it's come together, and yeah.
Listen, I commend you for that. I wish there were a lot more microcap companies that take that kind of idea and use it. So congratulations. Let's talk a little bit about, when I think of Avante Logixx, I really think you guys are sort of like the Rolls Royce, the Ferrari of the industry. Does that change? Are you looking for businesses that may change that sort of idea, or is that really where you guys are going to maintain your style of business? Because it must limit you somewhat. I mean, there's only so many Ferraris out there, right? Or are you gonna just grow by finding whatever the best opportunities are?
No, definitely in the platforms we have, I think the Rolls-Royce Ferrari is a fair, analogy to them. But I take you back to that focus on where it's important and necessary. Mm-hmm. So there are low cost, businesses out there that, provide low value add, but because they're important and necessary, they become great long-term cash flow generators. So, so if I use Avante as an example, the Ring doorbell, is not going to displace Avante in these particular neighborhoods. That said, I could make a great business case why Ring doorbells is an important, business for the future of the security industry. And I would think about that thesis on its individual sort of right. So not to say that, we wouldn't go look for, we're probably not going to be in a mass market alarm company in southwestern United States. But there are lots of areas where maybe the Rolls-Royce analogy is not going to work. But if security is important and necessary, or its solution is important and necessary, that for me is the secret sauce. Like that, creating that sustainable, competitive, differentiated advantage, the switching costs, the moat, like that's what gets us excited. Recently we saw a business, not for us yet because it's not Ebitda positive, but this great business doing nano marking technology on high value goods. And, they're literally doing sort of, to dumb it down, kind of RFID like Q codes for 25 cents, a shot. And if it was further along and Ebitda positive, we would have been all over it, because as operators and as security practitioners, we understand the end user, we understand the problem that counterfeit goods has. And, at some point when we're generating 50 or 100 million bucks of Ebitda, we'll probably start taking some shots at some of that future technology. But
yeah, so that leads to the next question I had, actually. I mean, you guys must be seeing some phenomenal technology, some phenomenal new services and things like that. What sort of new initiatives do you anticipate bringing on? Maybe you're developing in-house, or some of the technologies you see out there that are pretty impressive.
Yeah. So certainly for now and the midterm, we are not doing or any sort of R&D or product development on our own. Technology is a enabler of our business. We are buying and investing in technologies that others are doing. So you will see us coming to market with some AI into our solutions. Some drone technology is hot on our sort of idea board. So we will continue to integrate leading edge technology into our security solution, but we won't develop it ourselves. And at the same time, we're integrating some technologies that are just making us more efficient internally, like in the back of the house. So that said, as I mentioned, the cyberspace, like cyber is super interesting. It's also super expensive and it's not yet cash flow generating in lots of cases. So, there will be a time for us in that area, but today we're focused on, acquiring and building businesses that can scale and generate cash.
So one of the questions we've received here, it's regarding your Ebitda goal. It actually says, is the 10% Ebitda goal achievable with your current business operations in this fiscal 2022?
Well, Jerry, thanks for that question. I can see the chat as well. What we aren't doing yet is giving forward guidance. And I hope that we will start to release some limited forward-looking statements because we do have such a predictable business. What I would say to you to answer that question in a bit more of a roundabout way is that we believe 10% is in the near term, and we're trending that way. And at scale and at maturity, we believe we can produce 15% EBITDA margins. What's really so dependent is this product mix and how we're growing. The decision to buy both IntelliGuard and ASAP as a bit the lower margin sort of human capital labor arbitrage businesses was quite deliberate. We bought both those businesses at just around 6 times. If we had bought the equivalent business with the equivalent customer list on a systems integrator, a larger reoccurring business, we would have had to pay a lot more for access to those same customers. So today we deliberately bought those as the entry point, and we're going to do a great job cross-selling and replacing and augmenting the human capital with technology and services. So back to your question about technology, I don't see a world in the 2 current platforms that the people ever go away, but I definitely see the mix of it's the person with the device and the offsite control center and the 2-way voice and all those things to make what today a typical human might be a 18% gross margin and a 5% EBITDA margin, is to turn that same cost of ownership to the end user into the same, let's just say $100,000, but instead of making 5% EBITDA, a blend of services and technologies where we're getting 15% because it's services. And so that's our organic cross-selling path that will turn those businesses into great contributors to the bottom line.
Fantastic, thanks. Now you've got some institutional ownership, a fair bit of institutional ownership. You mentioned the Fairfax investment as well. And tell me who covers you right now, because I think there's a couple groups on the street that cover you.
Yeah, so Acumen and Canaccord. So Nick Corcoran at Acumen and Doug Taylor at Canaccord are currently active covering us. Acumen initiated coverage just over a year ago. Cormark had been covering us, and through some of the restructuring to their business, we've dropped off their coverage list, but that's them. On the disclosed institutional investors, Chris Furnick at Polar is I think a 16% position. And then we have a couple of other great small cap, long focused institutional investors in the sort of the sub 99 that I won't name on this call. But that's also been a bit of the the tale of our tape, is that as much as we've got some great holders that are long focus, we also don't have a lot of sellers. And so as we do keep people up to speed on our progress and our trends, going back to that aspiration to deploy a lot of capital, I think 3 years ago, what I inadvertently also headlined was, hey, I'm going to be out for lots of equity. So, on the minimum volume that we have had historically, that's been a tough place for the institutions to get in. And so another reason Paul was very appreciative of the invite was that, at the end of the day, we don't need equity. We're not out there for anything today. And so making sure that we have people that like the story and are participating in the interim is important to us. And over the last quarter, thanks to, people like yourself and some of the other fans that you have here on the call, we've seen our volume increase by almost 300%. We've seen a lot less volatility. And, we recognize we might not be as sexy as some of the stuff out there in cannabis and medical tech, et cetera. So we're just going to keep doing what we do and keep putting up results. And we hope we reward our shareholders with lots of accretion.
Yeah. Well, if you execute, history proves that that you pay off for shareholders. So we got a couple other questions here. You can probably see them as well as I can. I'll let you decide which ones you want to answer. CEO founder that you admire and why?
Well, I'll say two guys.
Besides yourself.
No, listen, as a guy who never officially finished high school, I stand before you today as just a student of others. And so mentorship, and I've been blessed with a lot of people that have been very generous with their time and their expertise. So I had a great opportunity to have a pretty intimate dinner with Carl Icahn probably about 14 years ago in New York. And Carl said, there isn't a company on the New York Stock Exchange I can't take 30% of the overhead out of. So talking about, sort of value and being really disciplined on that side. And then, I also had an opportunity to get to know Wayne Huizenga, and, both the waste management and the Blockbuster story are very, sort of relevant to me, and probably the insight of, at the end of the day, this waste management story was, he had a jet long before he could afford one, but, that idea that he was moving around the country, making relationships, and, never allowed the team to fly during the day. And so, over 10 years, lots of steak dinners and lots of, the mom and pops that he got to know. And by the time it came, time for those guys to look for their exit, he always was at the table and ultimately, won. So he was a fascinating visit. But otherwise, I hope to be a chapter in a book called The Outsiders one day, which are just those quiet guys that put up, above index returns for years and years and years. And when they're building the big corporate headquarters, and they're buying their third airplane, sell the stock. So
yeah, exactly. You touch on something, and what I do notice quite often is that it's the great M&A stories, and you're truly not just an M&A story, because you've clearly got some good synergistic and organic growth, but it can't be a sexy business. It's got to be waste management. It's got to be, funeral homes. It's got to be, these businesses that are steady Eddie, that, are not the sizzly, software and so I think you're in the right space, and the sort of non-sexiness of the business is sexy in an M&A sort of way. So I wanted to bring that up. What would you say, for investors, what metrics should investors really watch closely to understand how you guys are performing?
Look, so number one, keep an eye on our ability to compound that reoccurring revenue number, and to continually add dollars to it quarter over quarter. And then number two, I think watching, one of those mentors said, revenue for vanity, profit for sanity. So keep an eye on our cash flow and our ability to generate cash. And, probably, Paul, back to that comment you just made about the acquisitions, I really do stand by that idea that says, anybody can buy a business. Anybody can financially engineer something. to be able to buy it right, get the synergies out of it, and just produce cash and do it again. You know, I definitely think that, you know, there'll be a time that I'll say this is our 50th acquisition, but I'm not going to do it. You know, I'll be frank. I've got myself over levered in the past, you know, and all optimism and, you know, not worried about the downside. So just that disciplined growth, disciplined buying, using the appropriate amount of leverage is so important to, you know, making sure that it doesn't blow up. And these security businesses don't blow up. Like it's, you know, we could turn the lights off and come back next quarter. And I'm pretty sure I know within a few percentage points what my margin of error is on what the numbers are going to look like. So, you know, we're not waiting for a phase 3, you know, FDA approval, or, you know, there's no bet the farm. So
yeah, good. Let's give Jerry a chance to get this one question out of the way. How was your recent results received among small cap fund managers, and are you meeting them? Or are you meeting with them? Okay, there you go.
Yeah. So you know, as somebody who will remain nameless said, Craig, focus on the results, and the results will take care of the stock. I would say we've received some really positive feedback from both, you know, some of our small cap fund managers, as well as some of our larger, you know, I was actually surprised to meet a couple of investors over this most recent quarter that have great size positions and gave us some positive feedback. We are going to do some additional marketing with our analysts over the next few weeks. It's been a busy earnings season, so we haven't seen everybody. But I would generally say that I think we're okay in most people's books.
Right on, right on. That's always good to have. Listen, I mean, it's been great to catch up with you. I think we covered a lot of ground here. I've run out of questions, which will happen here. But is there sort of a parting message or key takeaway that you want our listeners to leave with today?
Listen, I think what I'd say probably my parting message would be we have a big market opportunity. We're disciplined, aligned team with skin in the game, and we're here for the long term. So with that said, we're, you know, always open to taking investor feedback, to taking questions. Happy to follow up with anybody in your network, Paul, that would benefit from that. And you know, as we're not going anywhere, and we're just trying to do a good, honest job every day.
Well, so far so good. Craig, if somebody wants more information, what's your website address?
So www.avante.logixx.com. And I hope you'll find a pretty robust investor relations section. We've got all our stuff up there. And then the email, which is investors@avante.logixx.com, comes directly to me and to Mark Henley and our corp dev team, and we'll get back to you as quick as we can.
Awesome. Fantastic. Okay, so today we've been speaking to Craig Campbell, CEO of Avante Logixx. Craig, thanks so much for being with us today.
Thank you.